Now, picture this. You're an avid business news watcher, you follow the markets and you keep abreast of the latest financial trends. You find the stock market fascinating, yet you've never tried your hand at investing on your own. Does this sound familiar? If it does, stay tuned, because in this edition of the show, we'll be taking a closer look at the fundamentals of investing, explaining the steps you need to take in order to manage your own financial future. Now, joining me in studio to give us their take on the fundamentals of investing are Noah Greenhill, General Manager, Marketing and Business Development from the JSE, and Adrian Saville, Chief Investment Officer, Cannon Asset Management. Gentlemen, thank you very much for your time today. Right, I think it's relevant to start off the show with one of our emails that we received, and it's from Kathleen in Johannesburg. She says that she's always been interested in investing on the stock market, yet always been put off since she's never really had a way to go about it, always found it quite complicating, and she's also confused about whether you should go through a stockbroker or not. Adrian, let's start off with you. I mean, let's start demystifying investing and how easy it is to actually get into the markets.
I think getting into the market is actually relatively easy. Possibly the biggest hurdle is the psychological hurdle that Kathleen might be alluding to. The question that I think any investor needs to answer right out the blocks is, do I want to invest directly or do I want to invest indirectly? And investing indirectly is much easier than investing directly. To illustrate this point, if you are going to be an indirect investor, you give your money to a unit trust. So you hand over 500 Rand a month, and that unit trust manager will then gather up everyone else's 500s and take investment decisions for you. The direct investor needs to take the far tougher decision of which specific companies do I buy. So they're essentially replacing the investment manager. Noah,
which way should one go about in investing? I mean, there's two different caps, indirectly or directly, and Adrian just said that, of course, the one is far easier than the other.
Look, to an extent I do agree with Adrian, but I also think that it depends on the financial situation that that person finds themselves in. You know, if Kathleen is 20 years old, has got no any other real commitments, doesn't have a bond, doesn't have any other debt, well, that's a different profile to the person who's 65 years old and needs to look after themselves for the next 20 years or so in maintaining their lifestyle. Very different way of getting into the market. Two things though is that I think people are scared of investing because there's an element of unknown in terms of the companies that they're buying or the products that they're buying, whether it's unit trusts or exchange traded funds or any other product on the JSE. And I think we don't do ourselves any justice, because I think we know more than we think we know. I think just by the mere fact of, if you had to say to Kathleen, where do you shop every day for the groceries that you put into your fridge or into your cupboard? You know, what kind of alcohol do you drink? Do you drink beer? Do you go and shop for clothes at Woolworths, Mr. Price, Studdiford's isn't listed, but those kinds of businesses? You're already in the market to an extent because you're fueling the revenues and profits that the companies that are listed are making.
I think one of the big issues, of course, is risk, and you don't know what you could be losing because there's all these macro issues that come to the fore as well. You know, a country could be defaulting, interest rate cuts here in South Africa, global interest rate cycles as well, and this all affects sentiment and, of course, the way that equity markets will be performing going forward as well. So apart from the fact that you are fueling certain companies and you are assisting in the economy, there's also other things to take into consideration, which I'm sure can become quite daunting.
Yeah, I think, excuse me, all of the things that you allude to, Eleni, are important aspects in the decision making. I'd take a step back and ask a question about what is the nature of the person. Are they a speculator or are they an investor? And a speculator is someone who's going to be giving far more attention to these near-term components like what's inflation doing, what's economic growth doing, will the South African Reserve Bank's MPC cut interest rates later this week, and so on. These will drive near-term sentiment. Benjamin Graham put it very well when he said near-term, the market is a vote-catching machine. Long-term, it's a weighing machine. Investors are weighers. They know that ultimately, if they buy great companies at good prices, these will translate into fantastic investments. Noah understands this extremely well.
But to some extent, we've also got to speculate, because you're not going to just buy into any company, though, Noah.
No, you're not. And that's the thing. You know, I always say, buy the company, not the share. You know, the share is 3 little letters that the stockbroker looks at and goes, yeah, ABC, good, yeah, we'll buy 100 of those. Certainly to an individual investor, at least understand what the company does. At least understand what they do in business, how they do it, what's their unique proposition, over and above just buying because you happen to listen to somebody on CNBC or some other station, or read something in the paper that said this is a good company.
Of course, it's deciphering from the noise and, of course, the fundamental factors as well.
I was going to say, Noah raised a very interesting point a little earlier on when he spoke about if you're a consumer, you already have some appreciation of the business. And I think one of the best known managers in this regard, a gentleman by the name of Peter Lynch, talked about this as investing by going around. You know, go into the shopping mall, look where all the consumers are. Is buying or interacting with this firm a great experience? If it is, you've probably already put one tick in the box of, do I want to own this company? The next question then is, how much do I have to pay? So am I paying a good price for this? If you can put ticks in both of those boxes, you've gone a long way to a successful investment decision.
Of course, it is about taking a look at things around you and ensuring that you have a general understanding of what's going on. But you mentioned indirectly or directly, and I think that's when someone else will be doing the homework for you, as opposed to you sitting saying, okay, I'd like to go into consumer stocks or resource stocks as well. Well,
I suppose it's all about diversification. That's the whole thing. Who's doing the diversification? Are you giving your money to Adrian and saying, you do the diversification on my behalf, because I don't really understand resources versus industrial versus banking. You know, so I don't want to worry about that. Let somebody else do that.
And for 500 Rand a month,
absolutely,
or even 5,000 Rand, it's going to be hard to